very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we will be continuing to work with the EMA crossover setup. Along with that, we will also be adding the stochastic in today's session. This is a brief summary of what exponential moving average stands for. The ATR, the average true range, and the stochastic. There is a new indicator which we are going to add today. Till yesterday's session we had worked with EMA and ATR only, and stochastic is a well-known indicator which was developed during 1950s, and it's still widely used, and it's simply a momentum indicator comparing a particular closing price to a range of its prices over a certain period of time. Before we get started, this is a standard disclaimer, and I would like to remind that whatever algorithms which we will be developing in today's session are simply for the tutorial purpose, and no claim is being made regarding the profitability or otherwise of the algorithm which will be shown during the session. And suppose if you want to use any of it on your account in the live or in the demo setup, I would suggest that you do extensive historical trial runs and also mock runs on demo account for sufficient times to get enough of understanding of how these things work out. And of course, this is not an advice to trade or any particular trading setup. On that note, let's get started. I would like to give you a brief idea of what we have done so far and what changes we are going to make in today's session. So till yesterday, what we had done, we were looking for buy trade only during the first 10 hours of the EMA crossover. When the EMA 10 crosses below EMA 20, we were looking for a sell, and when EMA 10 crosses above EMA 20, we were looking for a buy trade, and the entry point was defined as when the two periods back, when a candle has closed in green and then the subsequent candle has closed in red, indicating that there is a renewed selling pressure as the price has approached this EMA confluence, which we had defined using the candle highs which were needed to be above the EMA 10. So that was indicating that the selling pressure is coming back, and then our order was supposed to execute on the fulfillment of other conditions as well. In today's session, we bring in the stochastic, and the changes we can do is, for the today's session we will be focusing on first 10 hours only. Maybe on Monday we will try to remove this condition of first 10 hours and maybe look for the trades all along till the time the crossover is in a particular direction. But for today's session, we simply make this stochastic addition, and here on the chart you can observe that what happens sometimes when the price action moves closer to the EMA range. If it is during the initial momentum, the price doesn't really move again back towards its original trend till some time, and most of the time it goes into a consolidation, or even sometimes when our stop losses get hit, when we go wrong about our assessment, it simply continues to move higher. But if we suppose add the stochastic indicator, what we can do, we can bring in some additional conditions, such as that stochastic should be at least approaching towards overbought levels while we are looking for sell, and oversold levels while we are looking for sell. We are not exactly going for overbought oversold, we simply want some minor retracement should be there, so, and it should be good enough. So for that particular purpose, we will simply make sure that the recent stochastic, if we are looking for a sell trade, then the stochastic 2 periods back should have been above 50, both slow K and slow D, and when we are looking for a buy trade, as is the case here, then we will need the stochastic both slow K slow D to be below the 50. And then of course we will also be taking a look on the crossover. So whenever the tide will be turning from bearish to bullish, we will be going for a buy trade, and when the tide will be turning from bullish to bearish, we will be looking for a sell trade. So that's the idea is. And I think in today's session we let the first 10 hours condition as it is, and see if we can simply increase our target price as more often than not when we are entering into any trade during the initial hours of the trade. That trade goes for quite a distance, and we stand to make good amount of money. So that was the reason why we were limiting our activity to only first few hours. And then if you want to adopt a scalping kind of approach, it doesn't really matter. Only thing you want to make sure is that you are on the right side of the trend. So in such a scenario, I think giving up on this initial hour condition can be useful. So these are two different setups, and they need to be treated as such. So let's work with the initial setup only in today's session. What we will do, we will bring in the stochastic, we will define the conditions, this percentage K and the percentage D. We will need two stochastic blocks, one for the last candle period and one prior to that. And then we will when we are going for a buy trade, we want to make sure that one period back the slow K is greater than slow D, and prior to that it was in the bearish territory. Slow K was lower than slow D. So that is what the idea is. And then uh, our algorithm in next hour, that is 1 hour in window, it will look for a buy trade or sell trade depending on other parameters. And I think we can also give up on that condition that two periods back candle should have closed in the opposite direction, as we are already bringing in the stochastic condition. That will more than sufficiently compensate for that requirement, as it will also need to have experience some consolidation for the stochastic levels to rise to that extent. So let's see what changes which we will need to do in today's algorithm to work. So there is a standard subscription for the instrument. There is the position amount placed at 0, and these are the EMA requirements, the EMA 10, EMA 20 on hourly setup. These are shift 10 which we are going to use as it is in today's setup. Maybe on Monday we will think differently. This is the 4-hour requirement, EMA 10, EMA 20. These are the historical candle requirement. I think one condition will need to be changed today, that will be for shift 2. So 2 candle periods back, and then rest of the conditions more or less we can work with the same. One thing which we will need to draw is I think we are pretty good. It's looking good enough. So we bring in the stochastic, and then we drop the requirement of the candle 20, and instead of that we employ the stochastics to do our job. The momentum, and here stochastic should be there. So this is the stochastic. We will need 2 blocks to define, and this is the setup. Euro USD 10 minutes. We'll make it 1 hour. And shift 1, shift 2. So here we place it at shift 1, the last candle period, and this is shift 2 prior to that, and this is the first percentage key. And I think we will need to work with the SMA. So let us see here. Yes, both these MAs are SMA, simple moving average. So we use it as it is on the graph. We make it SMA. Good. And this one also SMA. Alright. So far so good. It's looking almost like we are progressing on the right path. Then we connect it to the multiple action, and we are going to drop one condition before we take in other conditions, and that was candle 20. So this is the candle 20 requirement, that candle open should be less than the candle close, which would have mean that the 2 periods back the candle was closing in green. We are not concerned with this condition anymore. It can close either way, and I think we have to make sure that we are not disturbing other requirements. So we will need to keep other conditions as they are, and to make sure we want to first input less. Okay, it is. We directly bring it here. Similarly, here also we drop this requirement. So the yesterday's setup was different. Today's setup is using with stochastic, and it's just about choice. Whichever work you want to design it, you can do that. Monday we might try with different composition. So all of these are valid, but they will work differently under different circumstances. That's the reason I think we need to be well aware of. And here also we drop this requirement, the candle 17 should be greater, so we connect as it is, candle 17 should be greater, and we drop this. So that's it. That was the change which we needed to make, and now we will bring in the if blocks to define the stochastic conditions, logical, and here we will need two if blocks on each side. So we are going to need 4 if blocks in all, and then we can look for a particular setup. I think we are going to need one more if blocks as well. I think we will need 4 on the each side. Yes, because we have to define the values as well, 50. So for that particular purpose, when defining the percent %k and the percent %d, we will need to define them separately. So let's first we do the shift to and shift to here. This is slow k, slow percentage k, and slow percentage d. First we are going to build the buy side. So for buy side the requirement would be that this was in the selling momentum, that is the stochastic was falling and the percentage k was below percentage d two candle periods back, and then in the last candle closing time that changed and the stochastic slow k rose about above slow percentage d. So here we keep it less than, the k is less than the d, and in shift 1 slow k is greater than the slow d, and here is the requirement first input greater than the second input. And now slow k is greater than slow d, and we want to make sure that these values we can work with both ways. Maybe we can even define the values for the shift 1 or shift 2. So let us see on the chart which one will likely work better for us. So on the 15 GMT the value is dipping below 50 for the slow percentage k, whereas on the 14 GMT when both these are still in the buying momentum, the values are above 50. So I think we will use this shift 2 to compare the prior values to make sure that enough of retracement is there, and for that shift 2 should be good enough, that is 2 candle periods back. So we compare the k value to be above, no sorry, below 50. We will need it to be below 50, and d should also have been below 50. So this is the buy setup, and we take this to our buy side and place it there, and then we will come back again to design the sell side. And this is so here we add these things. I think we will need to change here, and this block goes up, and We add now the first one. So we break this flow rather than directly going to pending open. Now the requirement that candle low needs to be below the EMA, less than will go here, and then we will check for further requirements. So this is and here we bring in the requirement back, and our requirement was that slow percentage D also needs to be below 50. So this is the buy side. I think we have done the necessary changes here. Now let's work with the sell side. On the sell side also we will need to add 4 if blocks, just the way we have done for the buy side, only in inversely, and here again we bring in 4 if blocks, and our algorithm will be symmetric. And as was the case with the buy side, so with the sell side we want our algorithm to make sure that 2 candle periods back the stochastic was above 50, and then in the last candle closing time it has turned bearish, that is slow K is now below slow D, and earlier it was different, slow K was greater than slow D, and then the slow K was also above 50 and slow D was also above 50 for the shift 2. So right now we check whether the current our back, if the slow K was below slow D, so we put in the condition that slow K should have been below, and we put in different condition for shift 2, slow K should have been greater than the slow D, and here we want to compare these values, and we define at 50 each, and this time these values needs to be above 50. For buy these were below 50, and for sell we want the values to be above 50. So this is it, and we want the slow K to be greater, should have been greater, slow K was greater than slow D, and this is also greater than 50, and that should also be slow K also should be greater than 50. So this is the new setup for the sell side, and we add these conditions as well. Now coming to the requirements. And here we do these changes, we rearrange this block just to make it look more aesthetic and easy to understand as well. And we are going to now break this flow. We bring in the first of these blocks here, and we provide the flow from breaking this chain here, tick ask should be less than the EMA 13, and now it has been defined. So we are almost done with the setup. Then we will export it to the JForex platform and try to run some test run for maybe a couple of minutes and see how things work out. This time around, what we will do, we will look for any particular time period when our requirement were already in place and we just want to make sure if the trade is happening or not, and it will be better for us to trade it to test it like that, and it should be greater than the 50. Okay, so this is the sell side. We are almost there, almost done. Just let me take a brief recap of the development. So this time we needed the slow K and the slow D to be below 50, so it is there, and we wanted this stochastic two time frames back, two candle periods back to be less, that is in the bearish territory, and then the last hour it turned bullish, so that our algorithm will now look for a buy trade and vice versa for the sell trade. We save it, we save the file, and this time we will save it with a different name, 13th of March, March 13th. Okay, let's export this. And take algorithms 27, webinar is no 2020 March, and here we have saved all these developments which we have done so far, and now this will be new one, March 13th. And now let's bring that here in the JForex platform to carry out the test runs. The euro is pretty volatile. Just a couple of hours back, it was trading above 1.11, sorry, 1.12. Now again, it is back. Yesterday also, we saw pretty volatile movement. And first of all, we will need to compile the file. So we will compile it now. This is today's code, and it was yesterday. This is the today's code, and as you can see, it is almost 1100 lines, more than that. Let's compile it so that it becomes machine readable and we can carry out the testing. Yes, compilation successful. That's good. And let us go back in the charting section to see if I can get any example where our algorithm would have looked for a buy trade. And I think maybe somewhere here. Yes, it should have looked for any kind of buy trade around 26th of February. So we will check for that 26th if it would have done any trade there. Test. We are not doing extensive trial runs as we are short on time, as we just want to make sure that algorithm is doing as it has been designed for, and that's the only purpose. Let's customize the time, and we will put in the 26th of February to 13. Okay, let it remain. We will stop the run anyway, and let's go. The take profit I think is of 25 pips. Just let me take a look. Yes, and the stop loss is 15 pips, slippage is 2 pips, and the lot amount is 0.1 million. Okay, 2 and the amount is 1 and stop loss is 15. Let's go. So this is the test run. Let us add a equity bar. Let's hope it doesn't take much time. Maybe we can give 1 or 2 minutes for the test run. And then I would suggest that you build it on your own, just the way we have done in today's session. And then you do extensive trial runs, not for only 1 day, but for even more than a year. And you will get an idea of efficacy of the algorithm, if it's going to work or not. So far, no trade has been executed. It's interesting. No trade is being executed, and we will need to stop the test run here. And I would suggest that you do the test run on your own for extensive amount of time, as we can't do the test run for longer time frame. Simply